Good afternoon, everyone. Good afternoon. Good afternoon. Check. Good afternoon, everyone. It's good to have all of you over here. Okay. All right. Thank you, everyone. Okay, for joining in. This is an afternoon session, and we have a live market situation with the Nifty at about 24,227. I just wanted to come online and share a few ideas about the way we are approaching these markets, and I'll watch the stream as well. So if you have any questions about anything, okay, which is happening on screen, okay, feel free to ask. Right now on your screens, this is a typical chart setup I look at. I have another tab open also about the 3-minute Nifty and the 3-minute bank Nifty. But when I'm focused on an instrument, I prefer to look at it in a 30-minute window, which is this here, my 30-minute tab. And I like to look at this system, okay, which shows me, okay, what is the trend, okay, of the previous day as well, right? So you can, okay, avoid this altogether and focus, okay, only on the order flow, because once you have an order flow chart, you have, okay, everything for yourself in one place, and that, okay, can, okay, tell you a large number of things about what is going on in the market right now, right? So the trend is, okay, actually, okay, very, very simple. We spoke about this yesterday, that there was an initiative seller in the market, and I pointed out to you, okay, that the previous rise, okay, was coming up on supply on red caught. Big money was selling into the market as it probed up into that level of about 24,800, 830, and the resultant of all of that is that we are seeing the Nifty about 500, 600 points down now at about 24,225. So I also, okay, was watching that 24,300 level to see, okay, if there is some evidence of some demand coming up. But the data is speaking over here, right? There isn't a lot to guess over here as to what has been happening. So I'll come to the left of my chart and show you, okay, what has been happening. But what is most important right now is what is happening, okay, from the open. So we've seen, okay, that rise up to about 24,660 earlier, about 945. This is that zone. And if you're looking at this zone, what it told us that we didn't want to engage with the market, okay, when it was probing up to this zone around 24,460 early in the morning, because all I saw on my chart was this caught, which was minus 6505. Now, I'll just like to pause a minute, and I understand, okay, that some of you are new and may not have seen an order flow chart before. Just to get everybody on the same page, this is what an order flow chart looks like, and it is simply a way of seeing demand and supply side by side, right next to each other as the price moves. And to the left, you'll get always about two columns, one showing the buyers and the other one showing the sellers, and everything which is in green font is to be considered the demand or the buy side of the market, and everything which is in red font is to be considered on the left side. Everything which is in the red font is considered to be supply or the supply side of the market. And all that we are doing is in the market, we are trying to identify situations when the market is dominated more by supply or it is dominated more by buyers. And guess what happens? If the market is dominated more by supply, price can come down. And if the market is dominated more by buyers, okay, then okay, price okay can go up, right? And all that which happens in here. So you can do this, okay, and visualize this in any time frame of your choice. This currently is a 30-minute. All that happens, okay, on the 30-minute time frame gets represented by a small number over here, which is this minus 6505 you see on your screens right now. We call that a COT, and simply means it's the net of demand and supply. So if that number, okay, is about minus 6505 in the red, negative, it tells you, okay, in that first period between 9:15 and 9:45, the ATPO, as we call it in market profile, supply was greater than demand. Okay, and when supply is greater than demand, price has no option, okay, but to fall down. So I always say this, and I spoke about this a couple of days back on my Twitter also. Every time price probes up and the market, okay, gets this kind of a selling, you do not want to be buying in a sea of sellers, right? So you have to look, okay, for an opportunity, okay, to short into the market, to sell into the market, to buy puts into the market. And this is the transparent information an order flow chart gives you, right? So if you had an order flow chart open this morning and you were looking at all this red coming up into these higher prices, okay, you would be buying puts, and the net result is by about 250. We are at about 12:53 in the afternoon. 3 hours later, okay, you're sitting, okay, on a 200-point profit, because you're not doing guesswork, you're working with data, and you're identifying the right side of the market, right? Let me just pan left and check, okay, what has been happened. Okay, it's been a very simple one-way move from yesterday. It's been a simple one-way move, okay, all through yesterday. So this is, okay, what transpired early at the open. I just showed you today's chart, but have a look at, okay, what was happening, okay, all through yesterday. That 24,695 onwards, okay, everything, okay, was red. We got a COT of about minus 9396 in that ATPO even yesterday, right? Now this is again a huge number, and because, okay, that COT is red, it is telling you, okay, that supply is dominant and the market, okay, is wanting to go lower. So what we also got subsequently, okay, was an initiative selling pattern, which is identified, okay, by this purple color bar, 24,585 to about 24,461, okay, and 451. And guess, okay, where the market, okay, stopped this morning, okay, exactly, okay, at the lows of this IS bar. So this is, okay, the zone, okay, which is identified by initiative selling pattern, and the rules are very, very simple. You short, okay, below the lows of the IS bar with a stop loss at the high of the IS bar, and that is, okay, your trending move, okay, which is there, right? Later in the day yesterday, I spoke about this also earlier, and I conveyed to you, okay, that there was, okay, some evidence of some green COT coming in. Now, some of this short, which came in at about 9:15, 9:45, and 10:15, 11:15 in the morning, they covered some of that short yesterday at the close, right? Now, this is nothing but risk managed, okay? This does not mean, okay, that there is a change of trend. A change of trend would be identified by an IB bar coming into the market, initiative buying pattern. But what the market does, it forms, okay, a series of patterns, okay, which we call the responsive buying patterns. And when COT, okay, supports that responsive buying pattern, all you have to do is understand, okay, that there is no change of trend, okay, and that there is some buying or there is some earlier activity, some old business which has booked profits, right? Now, how do I know, okay, they booked profits? Okay, because I see, okay, these patterns, okay, and these are what we call the responsive buying patterns, and this green is come because, okay, there was a lot of red, okay, to the left of the chart. So some of that supply booked yesterday, right? But what really happened, they booked, okay, around this zone, okay, around this 24,400 here, 24,390 over here, 24,405, and they shorted the market again at the highs around 24,460. So this was just a overnight risk management. They knew, okay, that the market, okay, is dipping lower, and they reshorted the market. How do I know they reshorted the market? Because I'm looking at that COT again over here. So all this came yesterday near the close, and this morning, okay, I've got minus 65,409, minus 4,000, minus 26. So virtually everything which was covered, and I can do a simple math over here. and find out, okay, how much was covered against, okay, all this supply which came in. This supply was about minus 35,000 on the COT, okay, when we were probing, okay, those highs around 24,800, out of which 4 plus 3 plus 7 plus 5, 12, 12 plus 3, 15. This is the net number, okay, which covered. So I do know that there is a lot more supply which is coming back. Now, how do I know, okay, that they covered and came back? Because, okay, I'm looking at everything which is here. So minus 6,400, minus 4,000, minus 2,000 over here. This is the same as all that was covered. So they took out that overnight risk and they added back. And now, okay, the market, okay, is going down again because the previous supply is back into this market, right? So what really happening over here, what is really happening out over here is we are not seeing any evidence of demand coming back into the market. So when I say, okay, watch a 24,300 level, or when you watch a certain level, okay, which you have in mind, and it could be the VWAP, it could be a POC, or it could be anything else, okay, which you want to watch, you have to, okay, watch for demand and supply. Okay, there is nothing else, okay, in that market. And how do you know, okay, that there is good demand or good supply in the market? Okay, you have to watch, okay, for these reds and these greens. There's nothing else to the market, okay, besides demand and supply. If the market, okay, is giving your zone, your identified level, any kind of importance, it is gonna have to show demand over there. And if it does not show demand over there, then that area cannot be called a support, because a support is only a zone which has got demand, right? Now later on, okay, price will probe up and everything will go up, but by that time the train has left the station and it is gone, right? So I always, okay, like to look at it in terms of what is happening in the futures market. Okay, the futures market is the one, okay, which is got that large volume institutional presence, okay, which is the driver of price action. Now I understand the option market is a lot more stronger than the futures market, but the dominant big traders of the market are always gonna be in the futures market. You know, we have a saying in Hindi, okay, sonar ki ek lohar ki, 100 hammers, okay, of the goldsmith against, okay, one hammer, okay, of the ironsmith. And the ironsmith, okay, is the one, okay, which has got weight, okay, to what it is doing. So even though, okay, the NF volume is substantially lower than the options traded volume, I always, okay, keep the futures chart open, because, okay, that is the driver of price action. The few people who are trading this volume know what they are doing, and they are the ones, okay, who influence price action. And I'll repeat that again, they influence price action. And what we are looking, okay, in that influence, what we are looking at in that influence is the role of demand and supply. What we are doing is we stripped out everything else, okay, which is there in the market. So in fact, okay, you'll see, okay, on this entire chart, there is nothing else, okay, which is required except, okay, the fact, okay, whether the market is showing us more demand or the market is showing us more supply. And if we can just follow that up, you can just follow it up, okay, with a bit of rules, because, okay, everything, okay, needs to have some house rules attached to it. Otherwise, okay, it would be a wild jungle. If you can follow it up, okay, with a set of rules, okay, you have, okay, something, okay, called a process, PROCESS, and a system in place which is going to help you navigate, okay, the markets, right? I'll just take a quick overview about where we are on a market profile chart. So what we've done is, so you have an option over here either to go with the continuous, or I'll go, okay, with the Nifty December futures. (26th December) contract. So this is, okay, where we are trading now. And let me just zoom out and go to a weekly time frame. So one look at this chart in terms of structure will also tell you, okay, that there is a supply side, okay, which is coming to this market. And I've been mentioning this to you again and again. Even if you do not, okay, work with an order flow chart, you have to pay attention to the messaging of the market profile. So this is, okay, last week's profile over here, right? And now, okay, you're trading, okay, below the value area low of the entire move of last week. So who's in control? The seller is in control. And when you see a confirmation of the same in your order flow chart, what can go wrong? Okay, it's about leaving the guesswork out of the window, and it's about working, okay, with a data, with a data set, okay, which tells you every single moment of the day before you get into a trade, what is the data, what is the information telling you. And the day, okay, you work out, okay, without that guesswork, and the day, okay, you learn to rely on hard data, hard information, put that guesswork out of the window, okay, you have a trade set up for you. You eliminate, okay, about 90% of the mistakes, okay, which other traders do, right? So yeah, I go, okay, back to a market profile chart, because the market profile chart, okay, tells me about the structure, and the rules of market profile are very, very simple and easily understood, okay, by everyone else. And they say the same thing: buyers control the region above value area high, which is the weekly. Sellers, okay, control, okay, the zone below the value area low. So when I know this, I just draw up an order flow chart. And on an order flow chart, all I'm looking for is evidence, okay, of a selling pattern coming in. Evidence, okay, of sellers coming into this market. So now, okay, we came to this zone around 24,300. There was a bit of a dilemma over here. The market, okay, was really undecided as to what it was wanting to do at this zone. But earlier on, the decision, okay, was very, very clear, right? So you see, okay, this kind of selling, okay, which is coming in about 10:45. So we have, okay, these bars, okay, marked out for you, which we call initiative selling patterns. Now, the opposite of the initiative selling pattern is the initiative buying pattern, right? Now, these are quick market orders which are coming into the tape, which are coming into the flow of market behavior, right? This has to be seen a bit differently, okay, from what we call the 10-bar COT, which is the net of passive and aggressive volume, right? Now, we say over here, the day aggressive volume, which is denoted, okay, by these IB and IS bars. So the IS bars, okay, will come in purple, and IB bars will come in green. There was just one example of both of them coming together. So I'll just walk you through the kind of rules, okay, we are looking at. So yeah, this is, okay, how it works. I have, okay, both of them over here in the space of about 10 minutes. This was a market, okay, which was not flowing, not fluid, and it was undecided at this point. So every time an IS bar comes in, or a IB bar comes in, these two bars become more important than everything else in the market. These two bars become more important than everything else in the market, because now I know, okay, some aggressive activity is coming into this market. See, the market, okay, is going to continue moving as the day moves from 9:15 to 3:30 p.m. Volume is going to be traded, and because volume is there, you can say buyers and sellers are there, and this number, the 10-bar COT, okay, will keep ticking. But what we're looking for is the presence, okay, of the big trader. Now, when this bar comes in, most people who are new to order flow will not be able to do anything, okay, between this price, because this is quick market orders coming in. So 24,335 to about 24,314, which is the high and low of this IB bar, or 24,319 and 24,300, which is the high and low of this IS bars. By the time, okay, it happens to you on your screen, okay, it would be a fraction of a minute, okay, even sometimes, okay, even a second also for this to come in, right? So we understand that, and what we do is, when the signal comes in, we look for the lows of the IS bar, or we look, okay, for the high of the IB bar, okay, to be crossed for it, okay, to be a valid signal, right? So in this case, okay, the signal came at 24,319, 24,300, but just take a note, okay, for the next few bars, the market, okay, did not probe below 24,300. So this signal is not valid for us, right? And the same thing, okay, happened over here, 24,314, 24,335, the high of the IB bar. Because it's an IB bar, we look at the high, okay, we look for the presence of buyers above this zone. And if you can pan right, okay, you will see, okay, that the market, okay, never, okay, went back above this 24,335 zone, right? So this signal, okay, was cancelled. But the other reason, okay, this got cancelled is because, okay, they came after each other, right? So an IS bar gets cancelled with an IB bar, and an IB bar gets cancelled, okay, with an IS bar. The other side of it is you have to, okay, look for a selling below the IS bar. So once, okay, you get this seller here in the previous bar at about 24,306, yes, the market, okay, dipped here. It got, okay, some supply, minus 1290. You keep a stop loss, okay, above the high of the bar, 24,330, and you hold on to your trade. Now, this is all probability. Okay, but what you're depending upon is all these sellers who came in this bar, all this red, okay, they have got positions, and many times, in fact, okay, 8 out of 10 times their position sizing is going to be bigger than you. Now bear in mind, okay, these numbers, okay, which are there on your screen are the numbers in number of lots. This is not share volume, this is not, okay, traded volume, this is the number in lots. So when I say 433 over here, or I see 49 over here, 103, 726, 232, this guy has shorted 230 lots in the Nifty futures, right? So if you're not confident, or if you're new to the market, okay, you have to just understand it, how much more this guy knows about the market, that he's decided, okay, to take the confidence of shorting 700 plus 200 lots into the market, right? And against that, okay, you add your 2 lots, 10 lots, 20 lots, 50 lots into the market, and you're believing, okay, that this market, okay, would hold, okay, these highs where these sellers have entered. And if you can turn left, if you can turn left, turn right, sorry, you will see, okay, that this market, okay, never, okay, actually, okay, went back, okay, above that high. It came up to about 24,335, but it didn't go back, okay, above that high, and it dropped lower. Lower down, okay, you're seeing an IB bar. This is a confirmation, okay, that seller from 24,330 has booked around this zone of 24,260, 280, and now, okay, the market is looking for fresh evidence of supply. So an IB bar comes in, the previous IS signal gets cancelled, and you're looking, okay, for the market, okay, for the next level of steps over here, right? So this is the 3-minute time frame. The dominant time frame for us is the 30-minute time frame. The dominant time frame for us is the 30-minute time frame, and in that 30-minute time frame, what has happened yesterday, I have seen something called an IS30 bar right here, around this 10:15. So this came in at about 24,585, 24,451. For me, okay, it got activated on this low of 24,451 breaking. Now this signal, which I saw yesterday, gets cancelled only, okay, when I see an opposite IB signal, initiative buying candle, right? So in this time frame, 30 minutes, I am not seeing, okay, any IB 30 still. So the market is still a short for me. And the other reason it's still a short for me is because, okay, these earlier sellers are still here holding with 24,585 as stop loss. And I just showed you, okay, at the start of the session, okay, how they added in the morning, and yesterday's shorts, okay, which covered back into this market, right? So we saw, okay, all of them covering yesterday, some of that short, but they have reshorted, okay, at the highs over here, especially, okay, in that first 2 hours, and they are holding the market. Now what you would like to see into the close today is whether they are covering, okay, those shorts, and you will know that immediately, okay, when this cot again becomes green later on in the day. So 1, 2, 3, one of these guys, okay, are covering, but no major green cot is there, which tells me, okay, that if this market bounces back to that 24,330 zone, okay, it can meet supply again. Okay, it may, okay, get supply again, and it can come back lower to these levels, because there's no evidence of demand coming back into the market, right? So here it is, guys. Okay, it's a very, very simple mechanism, okay, to watch demand and supply, but to be honest with you, okay, it requires an understanding of some base volume math, and there are nuances, okay, to this. Okay, you cannot, okay, just open up an order flow chart and say, okay, that there is a buyer, there is a seller over here, and all these things, okay, which are there. So those things, okay, which you understood about order flow from anywhere else outside, you'll have to, okay, leave it outside and start, okay, working, okay, with real concepts of demand and supply, right? So a lot of people, okay, when they come, okay, to an order flow chart, okay, they come up, okay, with vague terms, okay, like, you know, that someone's asked me just now, what is cot H and what is cot L? You will never see, okay, that reference, okay, anywhere on our chart. So why ask me that question? Because I do not use it. Neither, okay, do I use, okay, a concept, okay, called delta on any of my charts. So we'll work, okay, with what works for us. And I'll be honest with you, I won't tell you, okay, things, okay, which have not worked for me. This is, okay, what has worked for me, and this is, okay, what, okay, makes me trade in the way I do and identify, okay, situations in the way I do. So what we've done is, in our order flow, at least, okay, when we started off, okay, talking about order flow, we stripped out, okay, all those elements, okay, which are not required in an order flow chart, and we went to work, okay, with elements, okay, which work. And those elements are very, very simple. Okay, it's all about knowing where the passive demand and passive supply is, and it's all about knowing where the initiative buying is and the initiative selling is. And that, if you put together, is what is called demand and supply, and that creates what is called support and resistance on your chart. So no support is a support till it meets demand, and no resistance is a resistance till it meets supply, right? So these are basic things. Okay, and if you're looking at this market or trying to understand this market as anything else besides demand and supply, okay, there is nothing else, okay, which is required in the market, except that you identify demand and supply clearly, right? I'll just pause over here. I'll answer a few questions, okay, if any of you have any. I'm happy, okay, to talk about this. So someone's asking, what is cot H, cot high? I do not really know what is cot H and cot high. I never used it. We use something called cot, and that is what it is. If you've got something to ask about the way we do things over here, I'll be most interested to talk to you about it. I do not use that term in my charts. I really have not understood what it meant. So wherever you've heard about it, please go and ask them. They would be the better people who can answer those questions for you. If there's anything specific you want to ask about the order flow which we use at VTrender, feel free to ask about it. Guys, I'll just take a couple of more. So little bit more matter. There's no great rocket science to understand what cot is. There's no great rocket science to understand what cot is. What we do in cot is we measure the demand and the supply together, and when we are measuring it, we pay a lot more attention to what are called IB bars and IS bars, initiative buying and initiative selling patterns. And when IB and IS bars are stronger than passive volume, the cot has got a lot more to do this. To work for you, right? So pay attention to what is happening in the market. Pay attention to IB and IS bars. Pay attention to the 10-bar cot, and simplify, guys. Do not add complex information to charts and get complicated in the way of doing things. The market is very, very simple. It's just about demand and supply, and the day you can identify a particular zone as having demand, that zone is going to be your support. And the day you're going to be identifying a particular zone as having supply, that zone is your resistance. There's nothing else to it, right? So this morning I was watching that 24,460 zone, which I knew was the IS low of yesterday in that 30-minute part, and I was looking for patterns of supply over there, and we got ourselves into long puts in the VMR at that 24,450 zone, exactly at that level, because I was looking for evidence of supply. The order flow showed me evidence of supply. All that I had to do was take action on that information and launch ourselves into put. All right. So the whole idea is I basically did this workshop also a few days back on order flow, and the central theme which I put out over there was, we are not using technical analysis over here. We are not using all different means over here. That is just a means to an end. The central thing which we are doing over here is to learn to relax, and then you trust your process. You trust what is working for you. Now for you to relax, you'll have to have information which you can depend upon, right? That has to be something which has worked for you or can work for you. Then you can relax because your information is powerful. And for you to trust, you'll have to have experience of a working process which has worked for you in all kinds of situations before. So the way you go about it is completely up to you. But if you are not relaxing in the market, if you're not trusting a process, things can get a little bit complicated, in the sense you will not be able to get yourself into the right kind of trading situations, right? The day you can take stress out of your trading life and you can learn to relax, you can trust your process, you have an easy path for you in the markets. So the question is, if you're using 30-minute charts, we also use a lot of 30-minute charts. The 30-minute charts are what is the the 30-minute charts, okay, are what is being deemed, okay, by market profile, okay, to be the TPO, the time price opportunity. And previously, okay, they used to do it, okay, for profile. We like to use the 30-minute time frame also, okay, for the order flow. So what you can do is, okay, you can do this 30-minute chart on the left, and you can have, okay, a candlestick chart open on the right side, just like, okay, how I have on my screen right here. You can also drop a profile chart on the right hand side like this, okay, which I have, or you can go into an order flow and you can put a 30-minute on the left and a 3-minute on the right, just like how I have. And every time, okay, you get an IS signal, okay, that is the time, okay, you move into a trade below the IS3 lows. I prefer a 30-minute. This is the way I work. It could be a little bit different for you. I prefer, okay, to take my signals, okay, of a 3-minute chart with the 30-minute, okay, telling me, okay, what is the direction and bias of the market, right? So every time, okay, an IS signal comes up over here, I'm watching, okay, that IS lows to go short and launch myself into a put. What we also do is we watch, okay, for signaling, okay, to come in YA puts. So I'll have a 24,500 PE open, and sometimes, okay, the messaging, okay, comes in YA and options market. So you can, okay, have one of these charts also open. So futures on your left, your option on your right. And if you want concrete evidence, always go in the money. Okay, the deeper, okay, you go in the money, not that deep, but about 200 strikes out, 200 points out in a strike, okay, you'll get, okay, some very, very good signals. And the rules are the same. So if you see an IB bar over here in the PE, a short, okay, establishing in the futures, you got double confirmation market, okay, telling you that this is now a place for you to go short. In fact, okay, let me just point out, okay, to you a trade, okay, which we had taken in the 24,600 PE early this morning. It was based on the same initiative, buying initiative, selling patterns coming into the market. So this is a 24,600 PE order flow chart, okay, which is coming up over here. So if you zoom left, okay, you will see, okay, a lot of IB patterns over here, and the same rules, okay, apply. Okay, you go above the IB bar high and you look for signaling, okay, to tell you, okay, that there is some supply coming into the market. And when that supply comes in, okay, you go into a long put position, right? So early in the morning, as the market, okay, was dipping in, okay, there was evidence, okay, that these puts, okay, were getting bought. Okay, so we got ourselves, okay, into a put YA, okay, that same strategy, okay, which I've just mentioned to you, right? So you can, okay, also go into a candlestick chart and look at IB and IS patterns, okay, through that candlestick chart. So they will be depicted over here as orange and yellow, sorry. And every time, okay, that high is crossed, okay, you got yourself into a trading situation. So this is Nifty yesterday in candlesticks. So let me just get that Nifty futures. So you will see, okay, these purple bars, okay, show up many times, okay, on your screens right here. This is the initiative sellers, okay, who have come into the market, right? And you can, okay, always pan left, okay, and see, okay, where the recent selling activity is. So this came. So bunch of initiative sellers in the tape, and we are not seeing any evidence, okay, of some big green IBs. So it is just very, very, foolish, okay, to look at a market, okay, and just take a guesswork, okay, that it has got demand over here. When you're not seeing concrete evidence, okay, that there is no demand, why do you want to throw money at a market, okay, which is not showing you demand? But what a lot of people do is like, okay, they come up with imaginary levels in their head, and they, okay, come up, okay, with numbers, and they say, okay, this is a support, and this is a resistance. and then they tend to put money to work on something which is very, very imaginary, which is not backed by data. And that is the reason why a lot of traders do not make it into markets, right? So it's a good question which is coming over here from Devin. I'd like to take it. So what really happens is, why does the probability of signals being correct get low in stocks? Multiple reasons for this. Multiple reasons for this. One is depending on the liquidity of your stocks. So if you're working with something like an ICICI, SBI, Tata Motors, DLF, Reliance, all these stocks have got good volume, and good volume is essential for finding out demand and supply in the market. If an instrument is not traded that well, it's not traded thick, as we say in order flow, do not trade in it, because one thing is to get information on the chart. The second thing is for you to get your entries and your exits right. So order flow, if you're tracking, track with more liquid instruments. The other thing what you have to understand when you're trading with stocks is the stocks have two elements to it. The demand and supply comes in via the stock itself, the cash market, and the demand and supply comes in via the stock futures. Majorly speaking, a lot of stock futures are used to offset a position in the cash market. So you'll have to be a little bit careful about analyzing it from stock futures. Stock futures are very less times they are directional bets, except when there's some kind of an event or something going on. But majorly they could be used as a hedging instrument to offset a position in the cash market used by people, right? So just be a little bit careful if you are trading stock futures via order flow. Try to look at the cash market as well. So question is, how can the rest of the market work out in the Nifty? I was expecting a 24,190 level to come in. Let's have a look at order flow before we wind up. So the 24,300 zone did not show me any kind of demand. So the puts are still making sense and making here. I'm not seeing any evidence of demand coming back into this market. So one level I'm looking lower down is that 24,190 zone, which is due to all this supply which we are seeing. We'll see if we can get back to that level. And lower down 24,090, maybe today, tomorrow. We'll see how that goes out, right? Up ahead, this VWAP is going to be the reference of the seller today. See how it goes. So that's roughly around that 24,330 zone where we've seen that higher, where we've seen that seller, the IS bar higher, and that 24,460 of this morning would be a factor to go into it. So in sum, the evidence of the tape is not showing any kind of demand at the moment. So your best bet over here is to follow the trend, respect the view of the market, respect the trend of the market, and understand what role the seller is playing over here, and align your trades along with that view, right? So I'll call this session to a close over here. I hope this was insightful and helpful. There are many nuances to the way we understand order flow. It's not the same thing as looking at any other ordinary chart. This requires a specialized skill. It requires you to approach and view the market a little bit differently. So I leave you to it, how you want to go ahead with it. But I would highly recommend, and I mentioned this on my Twitter also, I've seen lots of change in the way order flow was viewed, say about 6 months back, and what has happened in the past month and a half. The clarity is that much more. And the clarity is because there is a lot of the supply, or the lot of that small money which is moved in, and the institutions are marking their footprint on this chart a little bit more better. So that is information for us which we can utilize. And we have this saying that you follow the tracks of big money, people who are adding big sizes in the market. You cannot go wrong most of the time, because those people have done their homework, they have done their research, and they know what they are doing. They are definitely not doing any kind of guesswork with their capital in the market. So there is a plan, there is a structure, there is a strategy to what they do. And I believe, and it's my understanding, my concept also, my process also, that if you follow the tracks of the big money, the big boys of the market, your chances of getting your trades right are that much more higher. right? So I'll leave you with this. If there's anything else, okay, to be added, we'll do it, okay, on X. Just follow, okay, that handle, okay. I'll keep sharing, okay, whatever, okay, I see about the market over there. And I wish you the best. There is a festive holiday season, okay, coming up, and then, okay, of course, okay, we're looking for the settlement, the monthly settlement also. But I'll leave you over here, and if there's anything else, okay, we'll do it, okay, via the X handle. Thank you for joining in, guys. Thank you.